Every few years, a company goes public that everyone wants a piece of. The hype is everywhere. The media can't stop talking about it. Your friends are asking if they should buy, and by the time you actually can buy, the people who were always going to get rich already have. SpaceX just went public, cementing Elon Musk as the world's first trillionaire. And before you touch this stock, there are a few things you need to understand, because this game has rules and most people don't know them until it's too late. SpaceX was founded in 2002 by Elon Musk with one goal: to make humanity a multi-planetary species. And when Musk started telling people he was going to build rockets and fly them to Mars, most of the world laughed. But something happened that nobody expected. It worked. And in 2017, SpaceX did something no company had ever done before. They launched a rocket, landed the booster back on the ground, and was able to fly it again, making orbital rocket reuse a reality for the first time in history. The entire aerospace industry was built on the assumption that rockets were disposable. You use them once, and they fall into the ocean. SpaceX turned that assumption into scrap metal. By 2023, they were launching 96 missions in a single year, nearly half of all orbital launches on the entire planet, while China, the second largest space power in the world, managed just 67. Then there's Starlink, SpaceX's satellite internet business that now has over 10 million subscribers, globally beaming high-speed internet to some of the most remote places on Earth, from rural Africa to conflict zones in Ukraine. Then came Starship, the largest and most powerful rocket ever built. A machine so powerful that SpaceX claims it could reduce the cost of reaching orbit by 99% compared to anything that came before it. This is not a startup. This is not a passion project. This is the most dominant aerospace company in human history. And it just went public, making a lot of people millionaires. But here's what you need to know before buying SpaceX. So, before you even think about buying into any IPO, there are a few things every investor needs to understand, because the game is not what most people think it is. The first thing you need to know is valuation. When a company goes public, it sets a price per share, and that price implies a total value for the entire business. SpaceX priced at $135 a share, giving it a valuation of $1.77 trillion. To put that into perspective, that makes SpaceX more valuable than every company on Earth except Apple, Nvidia, and Microsoft. And here's the important question: is that price fair? Well, SpaceX generated around $18 billion in revenue last year, but posted nearly $5 billion in losses, which means at $1.77 trillion. You're paying 94 times revenue for a company that is currently losing money. Now, that doesn't automatically make it a bad investment, but it does mean you are paying for the future, not the present, and that is a bet, not a certainty. The second thing you need to understand is who actually gets the shares, and this is where it gets interesting. In a typical IPO, around 90 to 95% of shares go to institutional investors, hedge funds, banks, pension funds, the big players who have relationships with Wall Street, and retail investors, people like you and me, get whatever is left over. SpaceX actually tried to change this. Elon Musk proposed allocating 30% of shares to retail investors, which would have been 3 times the industry standard and genuinely unprecedented. But then something happened. Institutional demand was so overwhelming, over $250 billion in orders chasing a $75 billion raise, that the retail allocation got quietly trimmed down to the low 20% range. The institutions wanted in so badly that even Musk couldn't hold the line. And the third thing, perhaps the most important, is the lockup period. When a company goes public, the insiders, the early employees, the venture capital firms, the people who got in when SpaceX was worth almost nothing, they are not allowed to sell their shares immediately. They have to wait. And with SpaceX, that window opens somewhere between September and December 2026. Which means in a few months' time, thousands of people who own SpaceX shares at a fraction of today's price will be legally allowed to sell, and when that happens, the market could get flooded with supply, and historically, that is when IPO stocks take their biggest hit. Now, to understand what might happen next, all you have to do is look at history, because we have seen this exact story play out before. When Facebook went public in 2012, the hype was unlike anything Wall Street had ever seen. The company priced at $38 a share, and on the very first day, retail investors piled in, convinced they were getting in on the ground floor of the future. And then the lockup expired. Early investors, including Goldman Sachs, Microsoft, and venture capital firms, dumped over 270 million shares onto the market in a single day. And Facebook's stock, which had already been falling, cratered to under $20, wiping out nearly 50% of its value from the IPO price. The people who bought on day one watched half their money disappear in a matter of months. Then there was Uber, one of the most anticipated IPOs of 2019. Priced at $45 a share, it lost 7.6% on its very first day of trading. And when the lockup expired 6 months later, the stock hit all-time lows. Now here's the thing, both Facebook and Uber eventually recovered and went on to generate enormous returns for patient long-term investors. But the people who bought on IPO day out of fear of missing out, those people suffered for years before they saw a single dollar of profit. And SpaceX is walking the exact same path. Remember that lockup window could open between September and December of this year, meaning thousands of early SpaceX employees and investors who got shares when the company was worth a fraction of $1.77 trillion will be legally free to sell. And when that supply hits the market, history tells us exactly what tends to happen. But here's where SpaceX is different from every other company we just mentioned. Facebook was a social media platform, Uber was a taxi app, SpaceX is building the infrastructure for the next century of human civilization. Starlink already has over 10 million subscribers and is growing fast. The US government relies on SpaceX for national security launches. NASA needs them for the Artemis moon program. There is no realistic competitor anywhere close to them. And Elon Musk, whatever you think of him personally, has already done the thing everyone said was impossible once. So the bull case here is real. This is not a company you can dismiss. So what does all of this mean for you? Well, the data suggests that buying into the hype on day one of a major IPO is historically one of the worst times to buy. Not because the company is bad, but because the price already reflects maximum optimism. And the lockup expiry almost always creates a better entry point. A few months later, if you believe in SpaceX long-term, the smartest move might simply be to wait. Let the lockup expire, let the early investors take their profits, and buy when the dust settles. Because the company isn't going anywhere, but the price very well might. SpaceX is arguably the most extraordinary company ever to go public. What Elon Musk built in 24 years is something that governments with unlimited budgets failed to do for decades, and the long-term case for this company is genuinely compelling. But compelling companies and compelling investments are not always the same thing. And the history of IPOs tells us that the crowd is almost never right about the timing. So before you buy, ask yourself one question. Are you investing for the hype, or do you believe in the company? Let me know in the comments below what your thoughts are. And as always, this is not financial advice. Like and subscribe for more business-related content.